This is London with Bitcoin Spike. Huge trade day. Let's dig in the details. We have an update for you. Hit the like button if you're trading Bitcoin. Shout out to the VIP yesterday. And guys, we have some great news. Big discovery in the charts, by the way. Big discovery in the charts. You need to pay attention. Watch the whole video. I'm telling you right now, watch this video. VIP, watch it. Let's go, guys. Now, in terms of yesterday's move, I brought to your attention the specific diamond pattern. I said that the amplitude move of the diamond pattern would be your target to the upside. Copy that. Way to go, VIP. What happened? The CPI index, CPI report came out. Consumer price index movement to the upside was completed. Congratulations to the VIP. Almost exactly, guys. If you did that specific measurement, congratulations. Now, this is a very, very interesting carry up from the bottom line support. I'm about to get to something that could really, really change the game. You guys want to see it now? You guys know the parallel carry up from the bottom support to the top line resistance. You know the specifics. And guys, this is London, former hedge fund owner, private, non-SEC, not financial advice. You know that we're looking at a macro cup and handle. The cup feature with the diamond handle from yesterday. What you don't know, guys, might hurt you. Pay attention to this. Let's pay attention to this, guys. Now, in terms of what happened in the summer of 2021, who found the specific low in this region? After the retrace, original $65,000 price of Bitcoin, upon retrace, who found this pattern? That would be me, guys. Bitcoin Spike, right? We found this specific pattern. What was it? Let's talk about it. It was the reversal pattern, and this is what I found in the charts. It was actually a very narrow, an extremely narrow and deep dig of a specific, and guys, look it up on Twitter. I found this. This was me. You guys know this, VIP. This specific descending wedge. Descending wedge on the weekly time frame. Now, pay attention. Pay attention to this big time, guys. Aside from everything else we're looking at right now, and guys, this is awesome. Glad to bring this to you. In terms of a look, let's go and fast forward to what we are looking at right now. I want you to compare the left side of your screen. I'm going to pull this over so you can get a real good comparative. We have the fire and ice, our indicator that is rocking and rolling. Take a look at the left side of your screen. Let me clean up fire and ice for a moment. You guys see it already. You see the left side of your screen? That was the weekly that I found. I brought it to everybody's attention, guys. In terms of that specific weekly, I was like, this is a big deal. Back in 2021, the summer, we caught the actual low, 29,750, boom, in the back. Small little ascending triangle. Now, look at the right-hand side. I want you guys to compare right now what we're looking at. Now, this is on the monthly chart. Do you guys see the expression? Boom. You ladies and gentlemen, see the expression with the low to the high, this low intermittent consolidation, constriction, and drop. Low, the high, intermittent constriction, that consolidation, then the drop. It is literally par on par. We're on the monthly time frame now. Hello, you guys see it. The monthly time frame. I have to bring this to your attention. One of the differentials, the weekly was summer 2021. This monthly issue is interesting because we seem to be rounding a corner with inflation right now based upon CPI report, etc. Want to shout out to all the VIP. Want to shout out to Venus. It was a pleasure yesterday working with Venus to set up $1 million hedge. Congratulations. We did that. It was profitable. It was a good day with the CPI. I just urge you guys with caution. If you're going to go heavily, make sure that you have heavy cash reserves. Bottom line. And guys, do what you want. It's not financial advice. You do what you want. You tell me how it works out. If you decide to be overexposed in the market mode, very excited about that trade. Venus, way to go. We did it. Congratulations. That was a nice $1 million position hedge for this CPI. We're hoping to stream guys live trading and such and whatnot to the extent that makes sense. Getting ready for the next big data release. If you're not plugged into the right trade group, that would be our trade group. We hope that you join. And if you're already a member, hey, shout out to VIP. What's going on? This is a distinct moment for Bitcoin. The problem, this was on the weekly. It was going to take a while back in the summer of 2021. Right now we're on the monthly, right? So we have a bit of an extended, it was extended, understand, this was an extended moment back in the summer of 2021. It was very relevant because that caught us or carried us up to the all-time high of 69,000. So we caught the exact literal, within $100 or $200, this exact low with this pattern. You guys can look up the old tweets. I'll bring it to your attention if you need to, but I brought that to everybody's attention saying, hey, we're in a bullish structure. So this is no different. Right now, I can't say that it's different. Technically speaking, there are some slight differences here, but I just have to say the expectation would be, guys, a conformance with the preceding structure in that summer of 2021. I'll say the fail-safe clause here is the following. I would look up alternation. I would look up the theory of alternation. I would work that into your understanding of what you're looking at right now. If you don't understand what I said, it's New York Institute of Finance. It's where Wall Street goes to school. If you guys have questions about what alternation is, I want you to drop off into the VIP. I want you to DM, direct message me for the VIP. That would be my commentary. I think extremely well stated in terms of the potential for a pivot and turnaround here on the monthly, which could take a bit longer. But as we would look at that, I really want our VIP to delve into the theory of alternation. Love it, guys, love it. In terms of that top level, pro level. Very important in terms of what is alternation. You guys, we'll dig into that with VIP only. A very exclusive group, very exclusive. Exciting to be building in 2022 and beyond. This is London, former hedge fund owner, private, non-SEC, non-financial advice, and digging into the specifics. Let's look at the 30-minute time frame. I want you to see how the 20 moving average, that 20 period moving average on the 30-minute time frame has operated as a nice level of support along this trajectory to the upside. All right, we'd like to maintain that level of support. We'll be watching in line with the New York Institute of Finance. I'll say this, their trend tactics or their trade tactics, which include Bollinger Band, flipping the 20 moving average and either having a downward target to the downside, if we flip it to the downside, or if we flip it to the upside, having a target of the upper band to the upside. So we have maintained price above on the 30 and on the hourly. If you've been paying attention in trading, you know that hourly has been phenomenally consistent. Really, really a great indicator to use. It got a little bit aggressive in terms of the moves, started to set and run, right, in terms of those Bollinger Bands, that 20 moving average. I'll tell you this, I really wanted to focus on the details on that weekly to the monthly. I want to bring it to your attention because it's a nice example of where we're at and a nice example of the level of work that we do that nobody else does. You guys know that. How do you beat the market? Well, you outwork the market. I'll tell you, 9 times out of 10, you outwork the market. May not be a popular answer. You all know everybody wants the quick answer, the quick, easy answer. But I tell you, how do you beat the market? 9 times out of 10, you better outwork the market. That's probably a really good start. You all would agree. I know VIP are like, you got it right. You guys know our work ethic in the back. It's no joke whatsoever. So let's dig in just a touch here so that I can give you guys a little bit more in terms of the technicals that I'm looking at. The CPI was a beautiful move. It really was. It was tight. It was a tight move, okay, depending upon how you structured yourself into it. It could have been a difficult day. I'll just say it wasn't for us. I didn't think, just to tell you, I didn't think we were in for a huge move. So I was really tightly wrapped up in the planning for that we did, Venus. We were tightly wrapped up in terms of that leverage. We were ready for it to move even a little bit, right? And I won't get into all the details of our trade until Venus and I decide to stream live. That's just going to be something pretty much between Venus and me. She's the #1 contributor. I'm building. She's my partner, guys. I'm building with her in 2022 and beyond. We're excited about everything we're bringing you. You guys are seeing some more videos come out, 100 rounds, training materials. It's going to be awesome. 2023 is going to rock. You guys need to know that. Honestly, it's going to rock, guys. It's going to be nice. It's going to be a lot of fun. We're going to have a great time. In terms of the cup and handle, let's revisit the cup and handle. The first thing I intuitively do to see if we are out of gas on this specific move is go with the Elliott waves. You guys know that. Go with this 1, 2, 3, 4, 5. How do we get past a fifth wave, right? We can either extend a fifth wave, etc., right? We can go into an extension of the fifth wave, have an extended fifth wave. But when I see a clearly indicated, when I see a clearly indicated fifth wave anywhere, I start to pull out the patterns. I'll tell you why. Because there is a tendency of an ability to be able to beat a fifth wave. Pay attention. The ability to be able to beat a fifth wave. And by that, I'm referring to the Elliott waves. What is an Elliott wave? Let's go through this real quickly so you understand what that is. Hope you guys are having a good start to your week. It sure was fun, wasn't it, with the CPI. Tomorrow, big deal with the FOMC. Big man's going to talk old Powell. What's up, guys? In terms of expected volatility, we'll trade it. In terms of the 1, 2, 3, 4, 5, we got through the ambiguity. That diamond pattern played out pretty nicely, guys. I mean, how often do you get a cup with a diamond handle? You understand that? Like a cup and handle, the cupature formation here with that handle was nicely expressed, but how often do we get that in the market? It's nice. That sounds like VIP, doesn't it? To tell you the truth, it sounds like VIP, a cup with a diamond handle. Exciting to be able to bring that level of technical to you. I just think you guys deserve it. I know you guys deserve it. In terms of that, let's see if I can pull in we can pull in the diamond. I think we already went through that. I'd have to zoom in a little bit. We can redraw that real quickly if you guys would prefer, just to see the typical diamond formation. Let's go ahead and do that. I draw them a little differently from time to time, just to add some variety. I like them to actually look like a diamond, right? So, but that amplitude, and what you're looking for anytime you see a diamond, just to help you identify a diamond, you're looking for a heartbeat. Boom, boom, right in the middle, okay? Anytime that you see a heartbeat, really highly volatile kind of central structure, that heartbeat that you see in the middle, you're in diamond turf. I'll tell you guys, big time, whenever you see that heartbeat on the screen, pay attention. There's a diamond, okay? The traders who trade a lot start to think, there's a diamond. Where's the diamond? What are we doing? Okay? Plan for that breakout to the upside or that downside. This one played out beautifully well, breakout to the upside. And let's talk about what the VIP looked at. This is huge. This is beautiful. We'll go over the returns now, and guys, we're not bragging about the returns. I have to say that. Separate trade, Venus carrying right now. Look at this. Very nicely done. I think I just may have erased some of that. Let me get back up into it. But a 600% trade. Where are we at, Venus? 600% trade. This was on a separate move in the market. Congratulations, Venus. Very nicely done. 600%. Exciting to see those types of returns. That was Venus. Let's look at JMAC, 432%. Ba-boom. JMAC, my man, what's up, brother? Another 144%. Ba-boom. Those are VIP returns. And guys, we don't have to shout from the rooftops all the time. Looking at this, and there's old Dayton. What's up, my man, with 100% trade. Nice new VIP, killing it in the back. You guys are seeing some new videos in the back. Just some material we're going over. A little bit of a Matic chart. I don't know who'd be looking at Matic. I don't know who'd be looking at Ethereum. There's some hot stuff in the market right now. I got to tell you guys, there's some hot stuff in the market, and to accompany that, if you will just plug in, stay plugged in the back. I'm going to tell you guys, if you're concerned about this or interested in this monthly versus this weekly comparative, hello, I'd be paying attention in the back. I'll tell you guys, that advantage, that VIP advantage is a real advantage. It just absolutely is. I so ultimately want to hit this bottom line support. You guys know that at that 10,000, 11,000. I just do. It's an ascending triangulation down there. So there's so much technically in me that wants to hit that line. You guys know that. If we get a pivot in the market, if we get a nice rebound move, it would be fantastic. That recession talk, that soft landing talk, we're going to see. Can you land the squadron of the economy softly? It's nosediving potentially, depending upon who you're talking to and what which economic parameters you're looking at and who all you talk to. We don't want to be extreme either way. Let's just say it'll be high time to get the next economic report. How about that? We'll just judge it on the continuing information. It's kind of the Fed's job right now, just so that you guys understand my take on it. This is my take. It's kind of the Fed's job to make it nosedive. If it's not nosediving, it's not, the Fed's not doing what it needs to do. It really is the job of the Fed to cool off the markets. To cool off, guys, the markets, the generation of just economic activity and growth, spurring growth, is not the solution. Typically, guys, to inflation. That's really getting the markets really geared up and excited. That's typically not the job of, it would not be the job of the Fed in this position, okay, while they're taking care of the issue of inflation, etc. So to the extent that you guys disagree or have other comments, let me know in the bottom. Love to know your opinion on the matter. I'm certified in markets, done a whole lot of studies, guys, in terms of economics, finance, etc., business school studies, etc. You guys let me know what you think about that. And guys, we'll go through the details. Now, the Elliott wave, to get back to it, the 1, 2, 3, 4, 5. How do we beat that? Let me clean up just a minute. By the way, what did we run into up here? What are we at? We literally ran into our specific golden short line. You guys know that. It is just an impediment for the bulls. It's like a nightmare for the bulls on the 4 hourly. Let's go to the 4 hourly. The specific hit directly into that golden short line in the 4 hourly. You always hear me talk about the 4 hourly on our fire and ice, and yeah, you guys see it. It's just like that's a nightmare level for the bulls. It just is. Fire and ice. You guys know that 4 hourly is tough. I am not sorry about it, because it's a very accurate 4 hourly indicator. Like, we parked at the 4 hourly golden short, our indicator. I tell you, it's the best in the business. Just like we're just stuck. That's just where it is, right? We're going into the meeting tomorrow with the FOMC, and we're just hammered into the golden short line, and the bulls are like, the bears are like, come on, bring it, you got it, you're gonna get past this line, huh? So we'll see if we can dig in and make some more sense of. Definitely, I want to I'd say discuss as the key litmus test those Bollinger Bands, the 20 moving average, without a doubt, guys. Up and over that 20 moving average, good key indicator for the 30-minute, the hourly, etc. We got to stay above that on the 4 hourly, well above it. We are. So looking at the 1, 2, 3, 4, 5 to extend this discussion, try and keep your attention a little bit. I appreciate you guys who are watching this. I know you want to learn. I know you're going to be good traders. If you're listening to all of this, I know you're going to be good traders. Keep it up, guys. It's a marathon, not a sprint. So looking at that curvature formation and the handle, anytime I see a 1, 2, 3, 4, 5, I am very inclined, guys, if we're going to beat the 1, 2, 3, 4, 5 and extend up an additional move, I need this channel to be a part of a separate pattern. Right? I need it to not just be on its own. I need this channel framework, that Elliott framework, to be part of a separate pattern. In this instance, it is. In this instance, it's part of that curvature formation and the handle, the diamond handle. So we meet that requirement in my book. However, it's complicated because we have another pattern in play. Pay attention, listen and pay attention, VIP, because this additional pattern is in play in addition to this 1, 2, 3, 4, and 5, and that's how you count. You count 1, 2, 3, 4, and 5. We made it up to that fifth, aside from the ambiguity in this level. Very nice. That diamond got us there, guys, along with the CPI report. We wouldn't have made the move without the CPI report. That surprise to the downside in terms of that inflation. Very nicely done. As we look at the flat top resistance, looking at the pattern framework here, whether or not you want to categorize this on the 4 hourly as a flat top, clearly flat top, meeting the requirement of the ascending line of support, flat top resistance, and yes, meeting the definition of either the ascending triangulation or the cup and handle. Okay, you're going to have the same amplitude target to the upside move. Whether or not you're looking at the cup and handle or that ascending triangulation, that holy grail is that 19,000 that we're looking at. That's the holy grail. That's where we're headed, guys. I got to tell you, that's the holy grail right now for bulls. I got to get to that 19,000. So, and we've been talking about that since these levels here. In terms of the move, let's say the move to be expected, I'll tell you the flat top resistance has orders parked on it right now. Without a doubt, has orders parked at the flat top resistance for a return and a confirmation at this level. The bears right now, I'll just tell you as a matter of fact, now we trade from the micro. You guys know we trade from the micro. We also love trading these event situations in terms of economic data releases or either CPI, or you could get into some other event generated trade approaches. That's what we like to do, guys. The micro, and we really appreciate the those economic data releases. We really like to trade on those. The bears are very happy right now with this specific formation, the ascending wedge. I'll tell you, there's a split in the market. I'll just tell you, there are traders on both sides right now. There are traders on both sides, okay? In terms of the specific rising wedge, typically a bearish pattern, the majority of the time we would see a capitulation beyond this level of support. Just mind yourselves that the majority of the time, the probabilities, as you know, we focus on Bulkowski. So paying attention to this structural framework here, I just tell you the bears are going to try and push beyond this level of support without a doubt. They're going to try and push beyond this level of support and have a capitulation herein below that level of support on that rising wedge. I would say it would deem null it has the power to deem null or to let's just say, we would say invalidate is a fine word. Some VIP have used that word with me. I don't find that in the New York Institute of Finance, so I don't use that word frequently. What I would say is it would represent a busted pattern. It would bust. If we were to go below this level of support, essentially it would bust. It would constitute a failure, better said, constitute a failure of the specific cup and handle formation, right? And the last thing that you want to do, I'll just tell you, the last thing that you want to do as a bull, if you're looking at a cup and handle or you're looking at a rising, let's say an ascending triangulation. If you're looking at an ascending triangulation, the last thing you want to do, the most dangerous move for a bull that's looking at a flat top resistance, you have to get into your pattern here. But you'll see that specific hitch here, that nice pivot in line with this pivot here on the 4 hourly. I'll tell you, the last thing you want to do when you have an ascending triangulation, mark my words, is pull up into a larger rising wedge and have the bulls fail in a zone and complicate into a heavier rising wedge. You see what that might look like and the danger it could represent to the bulls. Now, in terms of the approach, what I'm talking about, the kind of the scenario approach right now, not wanting you to be extremely guided or directed in any one specific. We got a chopper overhead. What's up, guys? Shout out to all the U.S. military, foreign service, etc. Anybody, joint forces, etc. Hope you guys are doing well. A lot of VIP military. I studied strategic military intelligence, served as a mentor at a master's level program, served as a mentor to some military guys on the master's level. So it was nice, but I'm not formally affiliated with any department, agency, bureau, nor military division, domestic nor abroad. That's my statement, guys. So looking at this, we do not want, I don't know if you guys picked up on the chopper. That was a nice bird. In terms of the flat top resistance, ascending line of support, I tell you, there are going to be orders at flat top resistance. You know that. And in terms of what I was getting to, this, not the hypothetical, but the split, the divide, what are the two options? How are you prepared for both moves in the market? Now, there's the hedge theory. Be prepared literally for both moves, catch either way. But there's also structuring of your capital. Are you prepared to operate at a lower level, right? If you're short right now, are you prepared to operate at a higher level? Very easy. Capital structuring. I invite you to read through New York Institute of Finance. They've got their own chapter on money management. Don't listen to me, guys. I'm a former hedge fund owner, private, non-SEC, not financial advice, but I want to invite you guys to read through New York Institute of Finance. Let me know what you think about their money management tactics, right? I think they say never over 5% in any one single trade of your trade account. I like that. That's nice. We do 1/100th per trade, not more than 1/100th of a comfortably expendable amount of cash. That's the way to go, guys. Now, we're going to dig into the micro, is the bottom line. That is what has guided us thus far, are the moves on the micro. Take a look, if I can pull up quickly. I want to show you all a very important move, and I've kind of saved this here. Take a look at the specific move that Bitcoin got up and out of. Look at this. As when I say that the VIP rock the bells, you understand when I say VIP rock the bells. I know there's some people out there listening still to this video. I want you to understand what the bell formation is. It's a hybrid between an expanding, a descending, expanding wedge, and a bump and run variation. You'll find those details in Bulkowski. I'll tell you, this is what it looks like. Any type of an expansion to the downside, we caught this. I told VIP this was a pickup level really before that drop, if you guys recall that. Absolutely, circling this specific exact spot. Hey, orders are here. Yeah, you guys got that right, and bam, move to the upside. But you see that bell pattern formation. Now, I call it a bell because you see the bell rock up with the momentum, right? You see the bell rock back up with the momentum. That bell structure here, we like to rock the bells, boom, to the upside in VIP. They are one of the strongest trading patterns in the market. Bottom line, they're one of the strongest trading patterns in the market. Don't only focus on your bull flags. Don't only focus on your ascending triangles or your rising wedges, descending wedges. You got to pay attention to the number one performer, guys, in line with diamonds. The number one performer, I got to tell you guys, the number one performing pattern is this bell formation, that descending, increasing volatility where the buyers are picking up lower and lower. That's what we want to do. We want to be a part of that drive to capture more value, and to rock it, boom, to the upside. They are phenomenal profit producers. I want to encourage you all to join VIP is the bottom line. We'll be looking for some micro indications in terms of exactly where we're headed. We're on the 5-minute in the back right now. We've been dealing with a fan reversal that we've been looking at. It's been a nice pattern to assess. I think you guys will definitely agree. We've been dealing with some fan dynamics in the back in terms of setting levels of resistance, flipping to support, and looking at that flat top resistance, always hunting down a flat top resistance on the 5-minute and lower time frames. Yes, we hunt down a flat top resistance anytime we can say, hey, there appear to be buyers in the market. That flat top resistance is an indication many times of the buyers in the market taking at the preceding pivot. So in terms of the micro, it does dictate, along with these big events with Powell, with CPI, it dictates the direction that we're headed next. That's how we trade, without a doubt. Glad you guys caught the Diamond CPI report. Congratulations, Venus. Way to go, way to trade. What we'll do is this. We will invite you to join our trade group. I'm London, former hedge fund owner, private, non-SEC, not financial advice. If you go to our Twitter, I will invite you to hit this link here, or from a desktop computer you can join. Not from a mobile, but from a desktop computer, or use this link here and join the VIP level. That'll put you in the back. And guys, we'll teach you how to trade. We'll get you involved with 100 rounds, our training program, and you'll see some incredible results. If you don't understand what leverage is, you don't understand what a hedge is, you don't understand what the market's doing, you've just done spots, maybe you bought a little Doge and some Bitcoin maybe one day, guys, I'll tell you, this is the trade group for you if you want to beat the market. We're always recruiting the number one traders out there because we want the best in our group. Once you join, if you want to learn to beat the market, go ahead and put I am VIP in the first pinned tweet. That'll put you in touch with me. And for everybody else that wants to trade, I'm going to tell you this, the $3.5 thousand bonus here on BTCC is the number one longest standing crypto exchange, period. No apologies, bottom line. End of discussion. Longest standing crypto exchange, longest lasting, longest existing crypto exchange, more historical clout than anybody is going to be BTCC. You hit that link, go ahead, sign up, and let's trade. Guys, this is London with Bitcoin Spike and VIP Trader. Hope you guys are doing well. Hats off to everybody who traded. Congratulations on those good returns. We'll talk to you soon. Thanks so much. Bye-bye.